Carlos Lopez with Ecom-Energy. We are an energy consulting firm, and we wanted to provide a quick update on how the coronavirus COVID-19 has impacted the gas market. There's been a lot of moving parts and things change day by day, but again, wanted to provide our customers and those interested in how the pandemic has impacted us in the markets. So the first thing I want to do is take a look at basically a macro look at the market. So this is historical gas pricing all the way back to 99. We can see some of the big events that happened in the country, starting here with 9/11. You have Hurricane Katrina, Hurricane Rita, followed in 2008-2009 by the housing bubble, the crash, and the Great Recession in 2009. And after that, we have some lower prices and some stabilization going on, and that really mainly is due to the increase in fracking or hydraulic fracturing, as I'm sure many of you have heard about. And really since then, the market has remained relatively stable because of fracking and because of the increase in storage and efficiency and levels of production. So historically, when you look back at some of these big events nationally, you see this little blip here, and that is the coronavirus. And you'll actually see a decrease in February, and that's unrelated to the coronavirus. It is more a factor of a timid weather and strong storage, which is creating a drop in prices after winter. So that's a macro look to put things in perspective. However, there is some wild volatility that has occurred. And so on this next graph, we're going to cover what we have seen. So again, as I mentioned, as we take a closer look at the last year of gas prices, you'll see there's been a steady decrease, and coming up into this time of the coronavirus, you'll see wild volatility. If you combine this with the oil war that also is occurring, it's created a lot of unknowns, especially in these unprecedented times, on what's next, how this is going to impact the short and long term. Because of the oil war, there's been a decrease in drilling, and oil drilling helps supply some of the natural gas supply for the United States. So about 30% of natural gas production actually comes from oil drilling in what's known as associated gas, or the gas that is associated with the drilling of oil. So because there's a cutback in oil drilling, there's also going to be a decrease in supply for gas. And again, this has led to an increase in volatility, as you can see in these ups and downs in the short term since March and April of this year. So if we step back and look at production historically, 2018 we saw record production for gas. 2019 we broke even more records on production and gas. And 2020 was actually forecasted to show a decrease in, or a flatlining in production. So that was already forecasted, but what the pandemic has done is that has sped up that timeline, and obviously that decrease in production is coming a lot sooner than expected with the pandemic. So that's happening now, which again is creating some volatility. However, even with all of this, the storage levels for gas are still 15% above 5-year average. And again, that is a factor which played into some historic lows we saw in February of this year, which I pointed out in the last graph. We had some mild winter weather, and that coupled with strong storage levels created that historic low. But again, soon after that is when the pandemic struck the markets, and again we're seeing some volatility. Just as an example of some of the volatility we've seen since April 1st, NYMEX prices for the second half of 2020 and 2021 have increased about 30 cents. So if you wanted to go out and get a deal for the second half of 2020, or like I said for 2021, that price has changed about 30 cents on the upside since April 1st, again pointing to the volatility we're seeing as things come out day by day, as news changes, as forecasts change day by day. It's reflected in the volatility of the market. Just this week, we saw an overreaction in the market as a pipeline exploded, and it caused a 10-cent increase in one day, and the next day it dropped back down just as much. So again, a lot of factors are going towards the volatility that we're seeing in the short term. So what does that mean? What are the main factors moving forward that we need to look at? Well, as I mentioned, production cuts are going to be a big one, and how that affects the short and long term. Again, production cuts were already forecasted. However, how are these severe production cuts with the oil war, as well as production cuts because of the pandemic, going to affect the long-term play of the markets? And what is summer weather going to look like? And how is that going to affect storage? Is that going to create some more wild volatility as we have a hot summer, or is it going to be timid like the winter we just had and not affect storage as much? So that's something to look out for. Also, the potential next wave. I know lots of states are starting to open up, which is great, but will there be another pandemic wave where another shutdown is necessary? And as states open up, what is the consumer response going to be? Is it going to be a response of timidity, of businesses slowly ramping up, or is it going to be a full force opening where everyone goes back to normal, whatever normal may look like, relatively quickly? So what's the consumer response going to be moving forward? So these are the factors to look at. All that to say, while the short term has created, again, as I've mentioned many times, some volatility, hopefully for your gas and power contracts, you've been hedged through all of this to avoid these fluctuations. And that being the case, there is opportunity on the long term. Like I said, there's lots of storage, and this pandemic is not forecasted to last years and years. So the long-term deals are actually showing pretty favorably price-wise. So it is something to look into if you're up for a renewal or extension on your deals. So with that, I hope this was helpful. I hope this gave some information. If you need anything or any questions on the market, procurement, or any other energy services, please feel free to reach out to us, and we'd be happy to help. Thank you all, and truly hope you're all staying safe and healthy through all of this. Thanks.